Gold is moving lower for the first time in a few sessions. It's off its record at $19.10 per ounce. And our next guest says a $100 per ounce correction would not be that surprising. Analyst Edel Tully is with us from UBS. Edel, thanks so much for joining us today. You say this range between $100 and $150 an ounce. If we see a correction in the next few days, it wouldn't surprise you at all. Why is that? Just because gold has come up so far so fast?
Hi there. Yeah, I mean, we can't rule this out. Gold has had a very impressive run, but we would view a correction in the magnitude of $100, $150, though, as a buying opportunity. That correction could manifest itself in investors simply opting to bank some profits up here, considering the run. It could be because of the risk of CME margin hikes. That is a risk. We saw one on in the early stage of this run in mid-August, and also overnight the SGE, the Shanghai Gold Exchange, also raised margins for its forward contract. That spooked a little bit of investors overnight in Asia, hence you saw that softer opening in Europe earlier today.
Edel, I heard you say that the pullback would for you represent a buying opportunity. Just how high then do you think gold could go, let's just say, in the next 6 months?
Well, actually, today we lifted our 3-month forecast, and we see gold reaching up to 2,100. So that's before year end. But instead of looking at those kind of absolute numbers, and we are conscious that we could see a short-term pullback, we like to view the current market in a range. So we look at a range of perhaps 1725 up to 2100. That allows for perhaps a short-term correction to manifest itself. Perhaps the market is disappointed from Bernanke's comments at Jackson Hole this coming Friday. But we do consider those as potential buying opportunities. And in a sense, there are many variables in place that should prompt a much higher gold price looking forward. What gives us confidence to that view, to the upper end of that view, is the physical market right now. Physical demand in Europe for small bars and coins remains very, very decent. That has been the trend for the past month. Also, surprisingly, yesterday, at levels approaching 1900, the Indian market was buying gold. That is not what you expect at these levels. That suggests to us that stock levels are quite low. And also, we are in the cusp of when the early stages of the Indian festival season, which will kick in later in the year. So
Edel,
if these physical buyers are, yeah?
I do want to ask you, you mentioned that there are other buyers in there that are a little bit surprising, like Indian buyers. What about central banks? Because they've started to turn into net buyers as well after being net sellers for the last few years.
Correct. And they have been important buyers throughout this year and all of last year. So far this year, central banks have bought over 200 tons. That is a lot of gold, and we expect that central banks will continue that trend. So over the weeks and months ahead, we expect headlines confirming that additional banks, be they new central banks coming into the mix or banks who have already purchased gold, adding to their reserves.
Edel, we thank you so much. Edel Tully joining us there. She is an analyst from UBS. She says not surprising at all that gold is seeing a little bit of a pullback, but you heard her say it, at least for UBS, as far as they're concerned, it represents a buying opportunity. They see it going up to $2,100 an ounce.